I'm Dan Fitzpatrick at StockMarketMentor.com on Tuesday, July 16th. And I want to look at Tesla here. You can see the stock down about almost 15% in one day. Now, here's what you need to know. The company announces earnings next Monday. So, of course, that's after options expire on Friday. It should make a pretty interesting day on Friday to see how the stock trades around that expiration. But this is a kind of thing that I would be careful buying on the dips. Let's say Tesla keeps going down a little bit. Even if you're buying at $100, which seems like a pretty nice level, you look at the weekly chart and you get really a different flavor. Now, I've been, bullish on Tesla all the way up. Why? Because I've been right. Well, yeah, but it's not me that's right. It's the stock that's right. When I see a stock moving up like Tesla is or was, I'm going to be bullish on it. So you need to be thinking about that too. Don't think about whether you're right or wrong. Look at the stupid stock and see what it's doing. If the stock is moving up, okay, roll with it. Let the stock move up and you be right by being long the stock while it's moving up. This is not that hard. Seriously, it's not that hard. Now, I'm looking at Tesla and suddenly I'm not bullish on Tesla. Do you know why? Because it's not going up anymore. I'm reacting. I'm not predicting. Now, earlier today, when Tesla was, it doesn't matter where it was. Earlier today, when Tesla was at a higher level than it was, I pointed out in an intraday note that the stock gapped up here. It was trading down below this last bar here. This was a bearish engulfing pattern. Okay, this is bearish. When a stock has moved like this thing has, and suddenly it gaps up above the prior intra-period high, in this case a weekly high, and then trades down and closes decisively below this last period's intraday low, this is an indication of a complete reversal of power from bulls early in the morning, buy, to bears. And now I'm looking at this stock, and this stock can move down quite a bit further. I mean, the stock could actually go clear down to 75 or even $70. And there really wouldn't be anything wrong with the uptrend if you have the proper perspective. But the thing is, between now and that unhappy day when the stock could fall back this low is an earnings announcement. So you can't extrapolate too much from this chart. You can't look at this and say, oh, well, it's gone up this far. According to Fibonacci, then the stock should fall down to 82.37 or whatever. Nothing against Fibonacci. But what I'm saying is there is a fundamental event between now and when this particular move could happen. So what I'm suggesting is that you not try to predict this kind of move. Instead, just appreciate the kind of risk that's here. So I would suggest just watching Tesla closely. I'm not going to tell you whether to trade it long or short. I guess I could, but hey, you get what you pay for, right? I'm not going to give you advice to do that. What I'm going to tell you is that there is a lot of risk to the downside. A lot of risk. I will say this, on the daily chart, I view there as being virtually no risk to the upside. In other words, the stock moving back up here in the next few days prior to earnings. Now, depending on what the earnings are, Tesla could go up to 9,872. I mean, the way this stock has rocketed up has just been kind of breathtaking. So who knows what this stock is going to do. Short interest is really, really high on the stock. So in response to or in reaction to earnings, this stock can move really big either way. But between now and earnings, between now and next Monday, this is like a day trader's stock. If you're not a day trader, this is not your stock. You need to move on. So, okay, and we'll keep tracking this, but this is the way I see it right now. Members, get over to the strategy session. It's ready to go.